Fears in the banking industry are mounting again, this time in Switzerland. Shares in Credit Suisse sank to a record low on Wednesday, prompting Swiss regulators to roll up their sleeves to help the troubled banking giant. Our Shi-hoo reports.
Swiss regulators said Credit Suisse can access liquidity from the central bank if needed, calming fears around the nation's flagship bank after its shares plunged as much as 30% on Wednesday. In a joint statement, the Swiss financial regulator FINMA and the nation's central bank, the Swiss National Bank, said that Credit Suisse meets the liquidity requirements imposed on systemically important banks. The statement also said that the problems of certain banks in the USA do not pose a direct risk of contagion for the Swiss financial markets, alluding to the collapse of US-based Silicon Valley Bank and Signature Bank. But experts say that risk in the banking sector is being reassessed following the collapse of those banks last week.
And there's sort of contagion, not because they had any connection with Credit Suisse, but because investor sentiment changed and people were scrutinizing other banks more carefully, and Credit Suisse is seen as the weakest link, if you like.
According to CNN, over the few years, Credit Suisse has experienced a series of missteps and compliance failures that have damaged its reputation. In fact, customers pulled out 123 billion Swiss francs, or around $133 billion from the bank in 2022 alone. And also last year, it reported an annual net loss of nearly 7.3 billion Swiss francs or $7.9 billion, its biggest loss since the global financial crisis in 2008. Wednesday's drop in share price came after the Saudi National Bank, Credit Suisse's largest shareholder, said it would not buy more shares on regulatory grounds. The European banking index fell by 7%. U.S. stocks also suffered losses, with the S&P 500 losing 0.70% and the Dow Jones Industrial Average falling 0.87%. Meanwhile, the price of some other assets climbed.
Like gold is up, the dollar is up, Bitcoin and crypto are marginally up, because I think people are running to safe haven assets.
Meanwhile, according to a Bloomberg report, the U.S. Treasury Department is working closely with the Federal Reserve and European regulators to review the U.S. financial sector's exposure to Credit Suisse. Shi-hoo, Arirang News.